All right, hello and welcome everyone to another episode of Trading Bitcoin. I'm your host, Tone Vays. We got a special guest for you today, as I will be joined by Ben Cowen from Into the Cryptoverse. We have about an hour. I am going to talk very little about charts because you guys see my charts all the time. So Ben is going to be doing most of the screen sharing today, and I'm going to be asking questions because he's got an excellent channel. So Ben, go ahead and do a full intro about yourself, including your history, your educational history and what you did before discovering Bitcoin. What was your trading experience? How'd you learn? As I pull up your Twitter, your website, and your YouTube channel for my audience. All those links are, of course, in the video description as well. I hope my audio and video is coming in loud and clear, guys. So on this note, Ben, floor is yours.
Yeah, so I don't really have the trading background that a lot of people have, right? Especially what you might have. Like I don't have that background. My background is very more like, say, academic and less trading. And so, my undergrad, I studied mathematics and physics. I have a bachelor's in math and a minor in physics.
That's funny. So I actually have a math degree and a hard science degree as well. So that's pretty damn similar.
Yeah. So yeah, we're pretty alike in that sense. And, and I really struggled to figure out what I wanted to do. I did an internship at NASA Johnson Space Center when I was a junior in college. And I mean, there were aspects of it I liked, but there are other aspects of it, like the bureaucracy and stuff of being in the government, or as a civil servant type thing, that I wasn't super fond of. And then I ended up going to grad school, and I got a PhD in nuclear engineering. And during my time as an undergrad in math, that's really when I learned about crypto, because I took a cryptography class, actually. And in that class, they didn't teach us about Bitcoin, but naturally I learned about it just because I was interested in cryptography. And so one of the things that really continued to interest me was that it wasn't going away. I mean, I'll be honest, right? Like back in the early years, I was not always convinced that it was going to be the next big thing, right? It took me a while to really recognize it, and especially coming out of the 2014 bear market and realizing that it wasn't going away was when I really started to get a lot more interested. So yeah, my background is purely academic. After my PhD, I ended up working at a national lab as a postdoc for a couple of years. And then I worked as a staff scientist for a few months. And then I eventually just quit to do my channel here full time. So again, it's not a background in trading at all. A lot of the technical trading indicators that a lot of people use are not really things that I use. But I more so mine longer trends in the market to try to kind of figure out where is the macro trend taking us. And that's primarily what I focus on.
No, that's super cool. Oh man, I want to bring you back. If I do switch from crypto stuff to like political science channel, I want to bring you back and talk about nuclear energy, because that's an awesome topic. So we're similar. So my undergrads were in mathematics and geology, and then my master's degree was in financial engineering. Not nuclear engineering, because you're clearly smarter. But after that master's in financial engineering, I'm like, screw the damn PhD. I want to go make some money. And getting that master's was hard enough. So that's how I ended up on Wall Street doing the risk model stuff. But wow, on that note, so tell us about, well, obviously the YouTube channel. I am still on screen share. Please subscribe, guys. Ben has an amazing YouTube channel. Clearly, you can see by his subscriber count. Very well respected. I actually haven't heard anyone that talks shit about you, Ben. Well, like I think every other YouTuber has haters, especially me and many other of our mutual colleagues. But I've never once heard anyone say anything negative about you, which is absolutely incredible.
I can assure you there are some.
Well, no one's ever said anything to me, man, because like after I was on your show, it's just like scheduling. Like the following week, I was in Dubai, and like I had Carl Moon come through my show. Holy shit! Did my audience and some of your audience that started watching me, did I get like a wave? Anyway, I'm gonna leave it there. Yeah, and also just tell us about your website real quick and your newsletter, and what do people get when they subscribe?
Yeah, I mean, so I put out a free newsletter, and you basically get it's like a weekly report talking about a lot of the different macro indicators in the markets, not only crypto, but also in equities as well. Sometimes we talk more about the Macroverse. I mean, obviously right now is a huge time for the macro stuff. I think a lot of people are learning more about macroeconomics during this bear market. We're all sort of putting on our macroeconomics expert hats. But yeah, I mean, you basically get access to a lot of, depending on the plan, you get access to various tiers of content, right? Whether it's indicators, risk levels, cryptocurrency portfolio construction using modern portfolio theory. I'm sure you're familiar with that, going through financial engineering masters and working on Wall Street. But these are sort of some of these tools that we've developed. The idea is to help people figure out the best way to navigate the cryptoverse on sort of a macro scale, right? Like, I'm not a day trader. I want to be clear about that. None of what I offer has anything to do with short-term timeframes. It's all about scaling in and scaling out of the market based on various macro indicators and the overall direction and the overall trend of the markets.
All right, very good. We're going to stick to our usual format. Whenever I have guests, I'm going to take less than 5 minutes and give my overview of the markets. I haven't done a video in a few days, but as I've been saying, like, Bitcoin's been so boring. We've had one exciting week since like June, and that was the FTX crash week. It was exciting, but not exciting in the in the best of directions, if you believe in Bitcoin rising. So that was like the only exciting week. Other than that, it's been consolidation. Here's my weekly chart. I hated this descending triangle. We got rejected by the 20-week moving average. My target off the triangle is all the way down at 11.5. I don't know if we will get there, but that is the triangle target. Right now, I am eyeing Bitcoin as a dead cat bounce into the breakdown area of 18.5 to 19,000, where it might also meet its declining 20-period weekly moving average, and then we reevaluate. Only if Bitcoin gets above the prior swing high, which it actually has not done until maybe back in March of earlier this year, where it ran into double moving average resistance. We have not had a clean break of the prior swing high. I would want to see it, but then we're once again going to run into some serious moving average resistance. But right now, that is what I'm looking at. I am kind of praying that this is the bottom, but I don't believe markets usually bottom in this way. So I'm still leaving a pretty high probability that we're going to have one more leg down. Right now, we are consolidating based on the daily chart. We're just consolidating. This can go either way. This consolidation on a daily scale is technically taking place after a run-up. So that does slightly increase the chances of us breaking to the upside. But again, the weekly scale, however, is still leaning somewhat bearish. I will say that on a weekly scale, the oscillators like the RSI, like the MACD, like the CMF are bullish. So that's a good sign. That's pretty much it. We're not going to go into lower than a daily time frame. Ben, if you have a question for me, fire away. Otherwise, I'm going to stop my screen share. We'll go to you. We talk about Bitcoin and then save some time to talk about traditional markets as well, like oil and S&P or any specific stocks you may want to discuss. That's my general overview. One last thing. I really loved seeing the funding rate get smashed on the FTX drop. And in all prior times, whenever this happened, Bitcoin has started a nice bullish rally. But again, we have a first where that did not happen. We've rallied up a little bit, but nothing substantial. And this has been by far the longest stretch in the funding rate being so depressed without a decent up move. All right, floor is yours.
My only question was, so it sounds like your general expectation could be something like a bounce up to the 18 to 19K range, but then a potential rejection if we get up there.
Yes.
Okay. Yeah.
Now, if that rejection keeps us above 19,000, and then we go back and break, keeps us above 16,000, and it doesn't make a new low, and then we break that 19,000, then I'm going to start to be super bullish.
Okay. Yeah, fair enough. All right. Well, let me share my screen if it will allow me. And then I will try to go through as many things as I can.
And I'm going to keep an eye on the live chat to see if there's any good questions from my audience.
Sure. Can you see my screen?
Yes, I can.
All right. So what I've made here is an indicator dashboard for Bitcoin specifically to try to understand what is the overall risk in the market. So we have price metric risk, on-chain risk, and social metric risk. And each of these contain like 5 or 10 different indicators in and of themselves. For instance, if I were to click on the on-chain risk, it looks something like this, where the orange line is from 0 to 1, and 1 historically high risk, 0 historically low risk. You can see that every single bear market, the on-chain risk basically fully resets before we actually go back into another bull market. And we are sort of in the downtrend here. We're getting pretty close, right? All things considered, but it doesn't mean that the bottom is in, as you even discussed. There's a potential room for another leg down. And so what I'd like to do is, instead of looking at the on-chain risk specifically, to look at the total summary risk of all the indicators that are going into this risk metric, and those include things like the MVRVZ score, the Peel multiple, market cap to thermocap ratio, logarithmic regression stuff, the fear and greed index. A lot of people are very familiar with that, a risk metric for Bitcoin specifically, and then a lot of social indicators like followers to Twitter accounts that talk about crypto, subscribers to YouTube channels that talk about crypto, that sort of stuff. When you do that, this is the risk level. This is the sort of the risk on the current cryptocurrency asset class, or on Bitcoin as a whole. And what you'll notice is the current risk on Bitcoin, based on-chain risk, price risk, and social risk, is 0.146. Every prior major cycle bottom for Bitcoin, the risk on it ended up going basically down to 0 before the cycle had fully reset and we were sort of free to move back up. Another way to visualize this is to color code it. And when you do it like that, you get a chart that looks like this. And so what it's doing is it's color coding the risk on Bitcoin based on 20 different indicators that have all been normalized. And it's showing the overall risk on the entire cryptocurrency asset class as a whole. So blue, really low risk, red, really high risk, right? So the idea is that you scale in when there's low risk and you scale out when there's high risk. One of the things I like to do, though, is hide all of the risk levels, and except for the 0 to 0.1 risk band. Okay, so this is the lowest risk band that Bitcoin historically has always made it to before the cycle was over, right? Before the bear market was over and we sort of began the next bull market. You can see we reached that level back in 2011, and we spent a few weeks there. We reached it in 2015, and we spent a few months there, almost a year there. We reached it in 2018, 2019. We spent about 3 or 4 months there. We haven't reached it yet so far, this bear market. We have come pretty close. And if you isolate the 0 to 0.2 risk levels, or you can see that we have gone into that below the 0.2 risk, which is where we currently are. But this still shows there is some likelihood, I'd say a strong probability, that Bitcoin will see lower risk levels. Now, one thing to consider with that is that the final leg down does not necessarily have to be that catastrophic. Okay, one of the ways to visualize this is to look at it where you turn some of these risk metrics off to see how it actually influences the overall risk. For instance, if you were to turn the social risk off, like let's suppose you don't care about the social risk, if you were to turn that off, it says we're already at a relatively low risk level, but still off of prior major market cycle bottoms, right? Even though it's still low, we're still higher than every other major market cycle bottom. What this tells me is that I don't necessarily think whatever the final leg down is has to be necessarily that catastrophic, but it does tell me that we need more time. I think there's a lot of interest in the cryptoverse, especially considering that we're 13 months after the peak. Like there's still a lot more interest this time around than there was back in 2018. And it still makes me think that there's a good chance that we still need just a bit more time for people to start to really get apathetic. And I am starting to see some of that apathy on my channel. I'm noticing, starting to see a lot of subscribers or a lot of new people not really subscribing. The view counts are going down. Twitter interactions are going down. I mean, they pop up occasionally due to sort of like major events like FTX going down and that sort of stuff. But the overall direction is down. And so, when I look at these types of charts, I think the whole idea is to figure out when does it make sense to slowly scale into the market and when does it make sense to scale out. And right now, I mean, in the context of where Bitcoin will hopefully go within the next 3 years, it's probably not the worst time. But this would still suggest that the low could very likely not be in based on historical bottoms in Bitcoin. And I could continue to go on, but perhaps it'll be useful for me to pause and kind of see if you have anything to ask or anything about that.
Well, my question is more on this chart. Is this something you put together with your team?
Yeah. Yes. So yeah, I have about 4 software developers that work with me to develop this stuff. And just to give you an idea, some of the stuff is, I really like the social side of things, because I think it's an often not talked about aspect. Like if you were to look at YouTube subscribers to a lot of YouTube accounts, right? You can see the bull market, right? Like you can see where the bull market was, and you can clearly see we're in a bear market, right? There's one metric, one of the few metrics that called the top, basically to the day, is Twitter followers to popular analysts who talk about crypto. Look at that 69K peak, where everyone was following all these major Twitter accounts. So I think the social risk is somewhat like of an underutilized thing. And the reason I think it's important is because if everyone's expecting higher prices and a sustained bull run, you need to see new money coming into the space, right? You need to see sort of a flat line on social interest and not just a continual decline. And basically, we've seen things more or less decline in the social risk over the last year. And if you want to look at the social risk specifically, this is what it looks like. And again, you can see where we currently are, the current social risk about 0.3. Last cycle, we didn't bottom until it basically went below the 0.1 risk level. So again, this tells me we simply need time. This spike right here is obviously caused by the FTX meltdown because everyone wants to watch the train wreck, right? Everyone tunes back in to watch that. But yeah, I mean, this is something that I developed, and the whole idea is to take every single indicator and figure out what are the ranges that indicator normally operates within. If it does show signs of diminishing returns, then we account for that, we normalize it, and then we weight it all across 20, 25 different indicators to have a risk level that sort of rules them all, so to speak.
How does someone have access to see what you're seeing? Is this
is my website,
or is it part of your service, or is this free?
No, it's not free. This is my website. Yeah, it's a paid thing. But we have a free newsletter that we put out, and in that newsletter, I will often post a couple of these, a couple of charts related to my website every single week.
Okay, but someone could sign up and pay a fee to have full access to this chart and others.
Yeah.
All right, sure. Awesome. Hey guys, I think this is super interesting. So hopefully my audience does as well. No, I don't have any more questions on this chart. It is super self-explanatory, and we can dig into some of the individual indicators, but I think there is more that we can do. We can always come back to it. What else would you like to show us?
I think that's a good idea. So there's a few bottom indicators that I think are worthwhile to talk about, specifically diving into the constituent parts of that indicator. What are the indicators that still suggest we have room to move lower? And some of them are things like the Peel multiple. And if you look at the Peel multiple, it's a measure of miner profitability. What you'll notice is that every major bottom for Bitcoin, the Peel multiple bottomed at around 0.3. And again, this was developed during a secular bull market in equities, right? So we have to, I constantly remind myself of this was developed during a secular bull market. At the very least, I would expect them to hit in a potential longer bear market, right? So for equities. So again, if you look at the 2011 bear market, this Peel multiple bottomed around 0.294. In 2015, it bottomed right around that 0.312 or so. In 2019, 2018, again, close to, it actually came, I think, just below, right around 0.312. Here's 0.304. And so far, the lowest it's gone this bear market was actually back in June when it went to 0.347, but it still sits well off of those major lows that Bitcoin normally sees on miner profitability every single bear market. And so this is an indicator that would be in line with your suggestion earlier on, is that, you know, we could in fact have another leg lower. And if we were to see another leg lower, then I would expect to see things like the Peel multiple give that signal to say, hey, like we're at a major bottom, like we were in 2011, like we were in 2015, and like we were in 2018. It has not given that signal just yet. Another indicator, if you want me to just continue, another indicator that is interesting is the Bitcoin supply in profit and loss. And you can take a moving average of this. This is a 30-day SMA. And what you'll notice is that every single prior market cycle bottom for Bitcoin occurred after these crossed, right? So they crossed and then we had a bottom in 2011, right? They crossed and then we had a bottom in 2015. They crossed in 2018 and then we had a bottom, right? Every single time you see these indicators, the supply and profit and loss, they cross before the bottom is in. And you can see right now, they actually crossed very briefly. Now they already crossed back. That's not that dissimilar from what we saw in 2015 though. They crossed very briefly, they crossed back. And then you see that final leg lower, which by the way, that bear market was also coming off of a double peak cycle. Is that double peak cycle actually had a much higher high for the second peak. And that bear market started in November and it ended in January of 2015. So there are some similarities there. And again, every single market cycle bottom for Bitcoin occurred after these two had crossed, where you've had the majority of people, or at least the majority of the supply of Bitcoin, was actually sitting at a loss. If you just view the loss side of things and look to see the percentage of supply in loss for Bitcoin at the bottom, the last two cycles, you know, it was well over 50%. Right here, it was about 55%. And then in the next cycle, it was also about 55%. Currently, it's sitting at around 49%. Again, suggesting that another leg lower would get us to those levels that we've seen in every prior bear market. So I constantly go back to these indicators, and these are the things that keep me conservative and have kept me conservative basically, you know, for the entire year, because I want to see all of the indicators provide that signal, right? I don't want to get too optimistic until I've seen a number of them give that signal. And then, you know, one more, and then I'll pause for a minute, is the balance price for Bitcoin. So if you look at the balance price, every major market cycle bottom occurred when we were having daily closes below the balanced price, right? 2011, here it is again in 2015, and then here again in 2018, daily closes below the balanced price of Bitcoin. So far, it hasn't happened yet. Now we had a wick below it. So I don't know if you want to include that or not. Maybe it's a maybe on whether it was, but no daily closes below it so far. And every other major cycle bottom had multiple daily closes below the balance price before the bottom was in. And so, you know, Tone, this bear market to me, it's just it's so painful, not because of the price drawdown, but just because of the time-based capitulation component, right? Like everyone wants to just throw their money into the market as soon as they get the chance. And I say, like, if the market were that easy, it wouldn't be like, think about this. If the market had a 90% drawdown in one day and then we just went up from there, it would be so easy, because you just say, all right, well, now we're back in a bull market. But the reason why it's so hard is because we have this time-based capitulation component. And it's just taking a long time. It's really draining people, right? Because people are, you know, they throw their money in constantly. It's really draining people, making people feel somewhat apathetic. And eventually, whenever the true bottom is in, whenever that is, it's like a lot of people no longer actually have the money to buy that dip, because they lost all their money buying the prior 10 dips before the final dip.
All right. No, that was great. Quick comments. I just DM'd David Poole because he's a good friend of mine. But let's see if I can get him on the show one of these days. It's been forever since he's been on my channel. And yeah, so you're right about the double peak of 2013 being similar to the double peak of 2021, but the second peak basically it went higher in price, but barely. Like it shouldn't even been counted. Like I wish it didn't go higher in price. It would have made my life so much easier because I was like talking about the 2013 double peak repeating from the beginning of 2021. And I was super bullish when we broke to a new all-time high in November of 2021 because that's not how markets normally top. I would have probably called the market perfectly if we couldn't break 60K back in November, but instead we went all the way to 68. So that really screwed my analysis up big time. And now I am waiting for a bottom. And you're right, it's awesome when it crashes super fast like it did in March 2020. That was a no-brainer buy. I have tweets that indicate that it was a no-brainer buy because of the big crash. And if BitMEX didn't shut down their servers, which they claim to this day they didn't actually do, but like, I don't know, I suspect that they did. If they didn't do that, the price of Bitcoin could have easily crashed to $1,000 back then. I don't know how well you were following like it in real time, but that was absolutely crazy. I think they shut them down, which actually saved the price of Bitcoin by a decent amount. But again, that's just my opinion. I don't know the inner workings, but I read enough about that day.
I remember back in 2018, I think, maybe history, from my memory, I think you were one of the few people that was actually bearish at 6K back in,
Yes.
back in like the October timeframe. I actually was sort of neutral. Like I thought there was a good chance the bottom could be in at 6K. And I remember you were one of the few that were actually bearish. And I mean, you were proven to be correct. I mean, we went down to 3K, and I mean, in hindsight, right, like that move down was the best thing that could have happened because it really reset everything and it led us into what came next. The reason why it's so painful right now is because we're not really seeing that major capitulation that we can all, like all the long-term investors, the OGs can say, oh, wow, that is the capitulation candle, right? It's just every single time, it's just one slightly step further down, but no major capitulation.
Yeah, I agree. The time has been brutal and it's debatable. So question to you, when did the bear market begin? Did it begin in December of 2021, or did it really begin in like April of 2021?
So it's a nuanced answer. So the first thing I'll say is essentially every single indicator says that the peak was in April, right? Or in early 2021, every indicator. But the other way to think about it too, which is a commonly said phrase, is that price action is king. At the end of the day, right? Like, do the indicators really matter if the price ended up going higher, right? So, for me, and in reference to what you're talking about earlier, where we put in a slightly higher high in November, my thinking is that was one way where not only were the bulls wrecked, but the bears were wrecked too, because a lot of the bears thought we would only go up to like 53K and then we would go back down. But instead, we went up and put in a new all-time high. So it's sort of like it got the bears out, right? It kind of removed them because we ended up going much higher than they thought. And then once we broke the all-time high, of course, the bulls were bullish, and then we ended up coming straight back down. But to your question, here's a chart that I like to look at. And this is comparing all of the Bitcoin bear markets, right? And one of the reasons I like this chart, the first way I'm comparing it right here is using the November peak, okay? So the green line is the current bear market. The blue line is the 2011 bear market. The orange line is the 2018 bear market. And then the red line is the 2014 bear market, which again is coming off of that double peak from 2013. You can see that this is the second longest bear market so far. The longest bear market still remains the bear market that started in November of 2013 and ended in January 2015, if you take November of 2021 as the peak. Now, if you take April, which I have this little toggle, you can change it to April. If you take April as the peak, this is what the current bear market looks like compared to the other bear markets. So it kind of depends, I suppose, on what indicator you're really looking at. To me, this doesn't really fit nearly as well when comparing the bear market as whether if you just say measure it from November, it really
Oh, there is a slight but there, right? Like I can actually argue that the bear market of 2013 ended in August of 2015, not January.
Yeah, sure, because there was slightly lower
there was another crash in August, and on some exchanges, it actually went lower than the January one.
That's true. Yeah. On some exchanges, it went somewhat lower. And it's not, I mean, you could argue if you think back to March of 2020, imagine if we had put in a new low then, how it would have just thrown off so many people, because on some cryptocurrencies that actually happened. But yeah, I mean, you're right.
Yeah.
Like you're right. In 2015, you could argue that the bear market lasted until August because on some exchanges we put in a new low and on some we didn't. But yeah, that's a fair point. And yeah, I mean,
that's how I ended up winning a big bet against Crypto Man Rand, who thought we were bullish. And I said, I think Bitcoin is going to go below 4K. And this is when Bitcoin was 10K. And then like 6 months later comes the COVID crash. I did get lucky there. I think if it wasn't the COVID shutdown, I don't think we would have crashed.
Well, even if you look at say like that risk metric I was talking about earlier, it says the peak was back in like February, March of 2021, according to those risk levels, right? It does not, the level that it went up to back in November was only 0.75 or so.
Right,
so
but you don't know that's the high until like several months later, right? And this is the thing that I try to tell my audience quite often, that it's hard to recognize divergence in real time, because had the price gone to 80, 90,000, every single oscillator metric would have made a new high versus April. So you don't know until several months later. I needed the price to fall below the prior swing low to admit we have a bear market, which means I waited for the price to go below $30,000, the June 2022 low. I needed that. And I was telling my audience the whole time, look, I needed to break the prior swing low of 30,000 in order to admit it's a bear market. And that won't help anyone, because by that time, it's kind of too late to take advantage of the bear market. This is why this year has been so frustrating.
So you're right. I mean, so the November peak, it's all obvious in hindsight, of course, which yes. I think the April peak, that I feel like that was a fairly easy peak to sell for me anyways, because every indicator was saying we were overbought. Like every indicator was screaming, this is at least a local top. Even if it's not the macro top, if it's a double peak cycle like 2013, we still need to go down. And that was why I was actually bearish in March and April. I thought we would go down. We would have like a 3 to 6 month bear market. And then I said we would have new highs, and we got it. But I was not convinced 69K was the peak. And it took me, it took me, I mean, honestly, it took me until Q1 to recognize it. And the reason, and I'll say why I sort of shifted my stance. I put out a video in February saying, all right, it's a bear market. Like, and these are the ways you navigate bear markets. One of the things I was looking at somewhat closely beyond, all these risk levels things, are just simply looking at this very similar pattern that we actually saw play out just like 2018. And what it was sort of just like this higher lows going into a rejection of the 200-day SMA, right? It was the same. It was sort of that same exact pattern that I was watching relatively close. And I'm like, look, guys, I lived through this in 2018 as well, right? You put in a low, a higher low after capitulation below the 200-day, then you get rejected by the 200-day. You fail to put in a higher low. And if you're not already convinced it's a bear market, like that is what convinced me, at least back in sort of Q1 of 2022. I was like, look, this is the same exact pattern. It's a low, a higher low, a rejection off the 200-day, and again, a failure to put in a higher low. And I mean, you could argue there could have been a chance where we could have bounced back and still would have continued. But one of the things that really cemented it for me was the ever-changing policy of the Federal Reserve, right? And seeing inflation go higher and knowing that the Federal Reserve was going to have to really start to raise interest rates quite aggressively to bring it back down. And normally when the Federal Reserve gets too aggressive, it sends us into a recession. And so that was why I've been very cautious this year. And I think a lot of things are sort of aligning for around the next Bitcoin halving, right? Like, by that time, inflation, good chance it'll be back down to more reasonable levels, good chance the Federal Reserve could be pivoting back to QE, and so on and so forth.
All right, so I would love to talk about the past forever, but we do have to talk about the future because that's what the majority of the audience are interested in. Several topics I do want to hit on before we end. I know I'll be respectful of your time. We have to talk about GBTC. We have to talk about the effects of FTX. And I want to talk about maybe some mining stocks and what do you see from the mining space. What do you want to talk about first?
I mean, well, we can start with FTX. That's what everyone's talking about right now. I mean, do you have a specific question or you just want me to rant about it?
I think there's no need to rant about FTX, but let's just focus on what does it mean for the price of Bitcoin? I mean, I always disliked companies like FTX when to me, there's no difference between Binance and FTX. Like the only real difference is FTX was using the money for political donations. As far as I know, Binance took a different approach. Instead of paying off a single regulator, they change jurisdictions every few years and like keep running away from them instead of running into them. But to me, I have a huge disrespect for any crypto exchange that has its own token. And the token was needed to create the company. This is FTX, this is Binance. Like if someone asked me before FTX imploded, which is the more likely company to implode, I would have said Binance. I mean, that would have been it for me for the same reason, because of the existence of the token and the leveraging of the token that they have full control of. So right now, as of today, there are rumors about Binance. If that shoe drops, like what do you think can happen?
I guess we come back in a year. I don't know, man. I will say this. I completely and wholeheartedly agree with the statement that, look, exchanges do not need a token. There's no reason they should exist. They don't need to exist. I don't know if you said that exactly, but that's my general.
Oh, yeah.
Yeah, there's no reason they need to exist. And the most common response to that criticism is like, well, it lowers the trading fees. But they're basically creating a solution to a problem they created. They don't have to use this token to lower the trading fees on their platform. If they want to lower the trading fees, they could just lower the trading fees, right? So it's sort of creating a solution to a problem that doesn't actually need to exist. Furthermore, when you use this sort of stuff as collateral and that sort of stuff, I mean, it's a great way to get completely wrecked. I will say the contagion from FTX, I don't think is fully felt yet. I mean, we're still coming out every single week. There's like a new company that had some ties to FTX that is coming out. And remember, back during the financial crisis of 2008, it took months, I believe, before the stock market actually put in a bottom after that meltdown, right? After that major meltdown that we saw, it took months. And so, with this stuff with FTX, I think that the biggest issue is that a lot of people might believe in the long-term vision of crypto, but let's say they're not tech savvy, or let's say they don't want to put in the work to own the keys themselves, right? Like if they don't want to put in the work to figure out how to do that, and all they want to do is use a centralized exchange, which I don't really recommend. I mean, I think that if you need to use it, get in and get out as quickly as you can, right? But if you're going to hold your Bitcoin there, it's not your Bitcoin, right? Not your keys, not your crypto. It's not your Bitcoin. And so the problem is there could be a lot of people who believe in the future of crypto, but because they're not sure if they're actually going to have access to their Bitcoin in the future, they might be somewhat scared or hesitant to buy it, right? If they think there's a good chance that the exchange they use could go under, right? Like if they're worried that, FTX 2.0 is going to happen, then they're going to be less likely to buy. And so I do think you're going to see some fallout from that. I mean, look, if you're a major institution, I feel like crypto kind of looks like a joke right now. I mean, you have C's, yeah. I mean, like you have the people, the powers that be, right? Binance and FTX dueling it out on Twitter, right? And kind of calling each other out. And it's like, it makes crypto in general look like a joke, right? And I will say there's a huge difference between crypto and Bitcoin, right? Like Bitcoin does not need all this other stuff to exist at all, right? Like they don't need it. Bitcoin does not need this other stuff to exist. But I do think Bitcoin has taken a huge hit because of it. I'm of the personal opinion that this bear market from a time-based perspective is pretty brutal, and it's about as brutal as we're going to see, because it's also coinciding with a potential recession. But I'm also of the belief that once we come out of the recession, once we come out of all of this crap that was created during the bull market that had no real intrinsic value, once we come out of that, Bitcoin should be stronger than ever. In the short term, my general expectations are that Bitcoin's going to remain under quite a bit of pressure for the coming months. And again, like, go back to 2008, it took months before the S&P actually bottomed, once the fraud was fully found out.
All right, so speaking of recession, the S&P 500, I talk about this on my channel all the time. I have been one of the few people all throughout 2022 talking about how this is not the big one. This is not the big crash. I still think that the stock market is going to make new highs in 2023 or 2024 at worst. Right now, we are dealing with some very serious resistance, but I am of the belief that the worst for the stock market, the US stock market, is somewhat over. Just have this one last hurdle. And the Dow Jones is performing a lot better than the S&P. The NASDAQ is down a lot. The NASDAQ will have to catch up. So I do believe that, I'm not saying that people are going to be better off. The 2019, I think 2019 was probably one of the best years in our lifetime. I think it was like the US economy, businesses, everything was booming until the forced government shutdown for COVID. I don't think 2019 is ever coming back. I just think that it was one of the greatest years. And times could have continued, but there were other forces at stake. We're not going to get into conspiracy theories, which I would love to do a channel on. So I still think that the stock market has a good chance to rebound. The Fed is not going to be raising as aggressively. They're going to significantly slow down. I think Europe is imploding. Capital is going to flow to the US. People are just going to speculate on US stocks because it's the safest place to park money. What is your view on the overall stock market, the recession, the Fed? Give us like 5 minutes on that.
Yeah, let me share my screen again so I can really show you and really talk about like kind of where I see things. And
then we'll get back to GBTC, guys. I do want to talk to Ben about GBTC.
So I want to go into the yield curve. So this is the current yield curve. And basically, if you're curious, like what various treasury yields will get you. This is all annualized, of course. You can see that we are seeing some inversion of various timeframes. Some of the shorter timeframes have inverted the longer timeframes. This is where we currently sit. If you scroll back in time to see what the yield curve looked like before the recession of 2008, it looks really similar, right? You see that inversion of the yield curve. Same thing back before the dot-com crash. You see the inversion of the yield curve, and then we ended up getting a recession. Now, if you look at the spread on the 3-month and the 10-year, or the 2-year and the 10-year, this is what you get, okay? 0, if it goes below 0, it means we're inverted, right? So below 0 means the yield on the 3-month is actually higher than the 10-year. This is a telltale sign of an upcoming recession, at least based on history. Like, I mean, you could always argue that this time is different, right? But at least based on history, this has always been a telltale sign that a recession is coming. Once the inversion occurs, it takes 3 months to a year or so before we actually go into a recession. That's typically the only way out. You can see once it uninverts, this gray shaded region, that's the recession. Historically, the S&P 500 bottoms during the recession. That's where the S&P historically bottoms during the recession. Out of like the last 10 recessions, the only one that did not bottom during the recession was the dot-com crash. And it bottomed after the recession, and probably because of what happened in 2001, right? And what happened there in that war. But this is the inversion of the 3-month and the 10-year, and you can see we're about as inverted as we were back in before the dot-com crash and the corresponding recession, and going all the way back to the 90s. If you go to the spread on the 2-year and the 10-year, which is not as big of as great of a signal, but it's still a signal that some people use. Once again, the inversion of the yield curve, once we uninvert, it leads to a recession. And it's normally during the recession that the S&P 500 bottoms. a great way that I like to visualize this bear market with respect to the other bear markets that the S&P is currently in is I have a chart here. This shows this is the every single bear market by the S&P 500 over the last like 100 years or so. So let's first isolate the current bear market. This is our current bear market that we're currently in, right? This is the financial crisis compared to the current bear market that we're currently in. Compared to this bear market, here's the dot-com crash that also experienced a recession. Compared to this bear market, here's the 1973 to 1974 bear market that was also during a period of high inflation. Again, all of them ended up going much lower and ended up bottoming during the recession, or in case of the dot-com crash, after the recession. Here's the one from 1946 to 1949. Also during a period of high inflation, but for a different reason, right? It was coming out of the Second World War. This shows us that you could have a longer bear market, but it doesn't necessarily mean that the valuations necessarily have to go that much lower, right? Like the bottom took another couple years before it was finally in, but we didn't actually go that much lower. Now, one of the things I like to do is show just the 2022 bear market and then sort of show the min and max for a lot of the different bear markets that we've experienced. And you can see that so far, this is a pretty standard bear market, a pretty average bear market in terms of the drawdown. It's not the worst bear market we've ever seen. It's not the best one either. And so far, it's sort of just in the middle of sort of the range that the prior bear markets have given us. Note that the bear markets that last longer than, say, about a year, 9 to 12 months, are ones that correspond to a recession. And the reason I think we're going to see a recession is because not only has the yield curve inverted, right? We know the yield curve is inverted, but the interest rate hikes that the Federal Reserve has carried out in 2022, I don't think they've fully been felt yet throughout the economy. There's a lot of evidence to suggest it takes 3 to 4 quarters before these interest rate hikes are felt in the economy. And therefore, the reason that I think we could potentially go lower is I think earnings expectations for 2023 are still too high. And if earnings come in a lot lower than where people might think they're going to come in, that could lead us into another leg lower in the S&P 500 and a major bottom. Remember, if we do get a recession, right? I mean, there's always the question, are we going to get a recession or are we not? If we do get a recession, it's normally during the recession, not at the end of it, that the market bottoms, right? The market's forward looking. So it'll likely be during the recession that we actually see that bottom. And the last thing I want to sort of finish with on this is, why are we not in a recession right now? One of the most common arguments was, of course, we had 2 consecutive quarters of negative GDP back in 2022, or first and second quarter. But one of the things to consider is that despite that, the unemployment rate, which again, I mean, I know the criticism is based on the unemployment rate. You could argue that it's not really measuring what it claims to measure, but every prior recession, which are these gray shaded regions on this chart, every single recession was called once the unemployment rate, this orange line, once it finally started to go up, right? So that's the reason why they haven't called a recession. Maybe it's also political. I'm not saying that. But to some degree, the unemployment rate remains at historic lows, right? It's only barely off the lows from this business cycle. Once it starts to go up, which I think it probably will, I think a recession will be declared. And look, the way we go into a recession is the Fed raises rates too much, right? They get too aggressive and the economy can't handle it. And normally the Fed would have not have raised this much, right? Normally they would have chickened out, several interest rate hikes before. The reason why this time is a bit more difficult for the Federal Reserve is just simply because inflation remains high, right? Inflation is high. They have to get, history shows that the Fed funds rate, this is showing a lot of different things, but history shows us that the Fed funds rate needs to get close to that inflation level, close to CPI, before inflation is going to come back down. So the main ways you get inflation to come back down are raising the Fed funds rate to around the same level, kicking us into a recession. Those things should bring inflation back down. The problem is can the economy handle it? So if we don't go into a recession, if I'm wrong and we don't go into a recession, I suppose the way out of it is somehow unemployment remains relatively low. And so far, the labor market has remained relatively tight. So there has not been any clear indication just yet that the unemployment rate is going to go up. I think there's a high probability that it will start going up in 2023.
Oh man, we can talk about this an entire day. Just my quick 2 cents on this is, first of all, I don't care if we're in a recession, not a recession. There's two things I care about. How is the economy looking outside my window? Though my window is changing every week because I'm always moving around. And the other thing is, how's the market doing? Okay, because that's what matters, right? You can't make money predicting a recession, right? The only way you can make money is as a trader is if you get the market direction right. So there could be a disaster out the window, but yet the stock market is rising and everyone's confused, right? We will see. So it sounds like you are pretty bearish on the stock market. It sounds to me like there is a greater than 50% chance you're thinking that 2023 is going to bring in new S&P lows.
I think so. I would say there's a good chance we will see a new low. It doesn't mean that the whole year has to be a bearish year.
Correct.
Right? You could put in a new low. We could put in a new low in Q1 or Q2, and the bear market could be over then, for all we know, right? Or we could just go retest the lows or something. I struggle to see. I think the main thing that keeps me cautious is seeing how every single yield curve inversion has led to a recession. For me, it makes sense to assume that this time is not different, right? And that we will eventually see a recession. I think the main thing to consider, though, is like, sometimes it could take a year before that recession actually hits, right? It just depends on, how much liquidity is in the system, how long it takes to really drain it out. So, there is some merit, I think, to your thesis as well. Like if we do go back up and put in a new all-time high somehow, like let's say we get some type of rally or something, you could still have it uninvert and then send us into recession. I struggle to see how we will get to a new high in 2023 when it still seems like we have this unwinding of the yield curve that needs to occur. And usually when it occurs, the economy goes to what, right? And absolutely kind of falls apart. And then the Federal Reserve has to pivot. They have to go back to QE. Furthermore, if you look at every single pivot that the Fed has ever done, like every single time they went from QT to QE, normally it's the market bottoms after they pivot, like well after they go back to QE. And the reason why is because it takes a catastrophe basically in the economy to cause the Fed to pivot. They usually wait for something to break. They wait too long usually. And so
they always wait too long because to me the Fed doesn't lead anything. The Fed's a follower. The free market tells the Fed what to do.
But the problem is that it's hard for me to get so optimistic about calling a bottom when the Fed hasn't even pivoted yet. Like when normally the bottom occurs well after they pivot. And so that's why I still remain somewhat bearish on equities. I kind of think that there's a lot of macro indicators and even crypto, like Bitcoin indicators, that are all sort of lining up to give us generational bottoms in 2023 that will then set us up for like a 2024, 2025 type bull market. I mean, look, Bitcoin does that. I mean, after the halving, it's also coupled historically with relatively cheap access to capital. But I think by the next halving, there's a good chance the Fed will be cutting rates and we could go, that could be getting a bit easier monetary policy wise. And so you could imagine just going through another standard cycle.
Yep. I will just close this segment on a statement that this particular recession, whether people call it a recession, not call it a recession, this one has been 100% man-made. Like the government did not have to shut down in 2020. The government did not have to sanction half the world. And the European Union does not have to start cutting down trees for energy. Like this one, China did not have to shut down the supply chain. Again, this in particular one was not caused by natural, free market forces. This one was direct result of government stupidity across the board.
Well, I mean, I think honestly, I think the Fed, they won't admit this, but I think to some degree they want to put us into a recession because they want inflation to come back down. And history shows, look at the 70s and 80s and look at what Volcker did, raising interest rates. And look what happened in the 40s when we had high inflation. Every single time it took high interest rates to bring it back down.
Yeah, we'll debate that all day. Again, I actually don't agree with that, but yeah, we can debate that all day.
It's fine. I mean, hey, we shouldn't agree on everything, right?
Yeah, no, that would be a good debate. But again, the reason for the high inflation is once again man-made. They did not have to shut down the supply chain in 2020. They did not have to print all that money in 2020. So again, you create a man-made problem, and now you're doing even stupider things for its solution. All right, but let's talk about GBTC, because that's another big topic. I saw a comment in the live chat where people are like, oh, GBTC was somehow predicting the rise, and now that GBTC is trading at a 50% discount, let me go to charts and see where the discount is today. I do have my own indicator on that, though I don't have fancy charts like Ben here. So today, the GBTC discount is 48%. And people see this as projecting that Bitcoin is going to head into this, sub $10,000 area. And I don't believe that. They're completely independent. Like, people have to understand why the GBTC premium was at 100% back at the 2017 peak. And did I lose connection for a second?
I don't think so.
Are we good? Okay,
Yep.
Sorry. That people have to understand why the GBTC premium was at 100% peak in 2017, like a 30-40% peak in April, why it went to parity, and why it's been in this toilet and continues to go lower. It's not a projection that Bitcoin has to fall in price to match what GBTC suggests. They are completely independent of each other, and Bitcoin did rise thanks to GBTC because all of these companies were taking advantage of the premium, buying up the underlying trust. Grayscale was buying twice the average mined supply of Bitcoin throughout, basically between the pandemic and the April 2021 peak. But then the premium went away. It became at par. No one was buying into the trust. So all of a sudden, a single entity that used to buy twice the daily supply of Bitcoin started buying zero. That removed the demand for Bitcoin. People also need to, like I tell my audience this all the time, in order for any asset to keep rising in price, you need buyers. In order for that asset to go into a bear market, you don't need sellers. You just need a lack of buyers. Ben, floor is yours on GBTC. What are your overall views on it? And give us your thoughts. And what do you think?
Sure. I like that last statement you said, because it's completely true, right? Like, you have to think about what is the case for the bulls at any given time, right? And if there's not a case for it, that there's no, like, the price just simply isn't going to go higher just because the current holders want it to go higher, right? You actually have to have a bull case there. But as far as GBTC, I mean, look, if you had actually looked at where it was back in the summer, it was already, it had put in a new low well before the actual price of Bitcoin had. And no matter how low Bitcoin goes, if the premium is going to stay negative, right, like, GBTC is just going to perpetually go lower. I'm sort of the opinion that Bitcoin and GBTC are I mean, I don't really even think about them as the same thing anymore. It's almost like you're trading two completely different assets, right? You're trading the premium on this grayscale fund rather than actually trading Bitcoin. So I would not use the discount to nav on GBTC as a reason that the Bitcoin price has to go to that same level, because so far, every time Bitcoin has put in a new low, the GBTC valuation just continues to go lower itself. So I mean, I don't really have like a ton of more insight than what you already said. I just think that my general expectation is that GBTC is highly risky, and if you're buying it, you're not really buying Bitcoin because you're not really controlling those keys. So I would rather just buy Bitcoin rather than GBTC.
Yeah, no, I'm not going to disagree there, though. I personally believe that discount of 48% will eventually go back to par.
Yeah,
that's my view on it.
I hope you're right. I will say that. I hope you're right. The main issue is that, like, a lot of people have been hoping that for a long time now, and it hasn't actually happened. Because I think there was some sort of speculation that if it gets turned into a spot ETF, and that discount could completely disappear, right? And you just sort of make it up when it gets converted. But it's a risk to take. I don't know if it's going to come back or not, honestly, and I'm not an expert at it. I would sort of defer to your opinion.
What's your view on? Okay, we got a good BNB question actually. I was going to talk to you about some mining stocks, but okay, so people are asking with the rumors swirling around Binance now, why is the BNB unregistered security being so stable? And my simple answer to that is it's now too important and too big, and too many people are like invested in it, and probably the majority is owned by the company itself. And people don't want to admit, nobody wants to panic. And that's kind of it. It's the same view that I think even if something happens to Tether has become so important that it's possible Tether stays at $1, even if it's not fully backed anymore. But I don't have a good explanation. I've never held a BNB token. I've never traded a BNB token. That's just my quick view. I don't know if you want to spend like a minute on this, Ben, and then we move on to some mining stocks.
Sure. If you look at the BNB Bitcoin valuation, we actually saw like a similar run back in 2018. It was actually about halfway through the bear market. You can see in June of 2018, BNB Bitcoin's valuation hit a new high, and then it proceeded to bleed until the market cycle bottom was in. There's a chance that if the bottom for Bitcoin is not in yet, this could just sort of be that same type of move, right? It goes and puts in a new all-time high, and then it slowly starts to bleed. You could argue that it's coming back down already, right? I mean, you could say it's somewhat stable, but these pullbacks can often start somewhat slowly. This pullback here on BNB Bitcoin back then was about 53% into the cycle bottom for Bitcoin USD. So if BNB Bitcoin were to pull back same level into say like a market cycle bottom for Bitcoin, it could, you could see it go back to less than 10,000 Satoshis pretty easily. I'm of the opinion that BNB Bitcoin, I'm of the opinion specifically that the BNB Bitcoin valuation is very high, and it needs to retrace probably about 50%, honestly, is my general expectation. I also am of the general expectation that the dominance of Bitcoin needs to go much higher before this bear market is over. I think there's a lot of random altcoins in the space that provide no utility, and they need to get completely washed out, and bear markets have a way of doing that. And just to make one quick comment on sort of that train of thought, if you look at the dominance of Bitcoin, this is what it looks like.
I was gonna ask you about that. I personally couldn't care less these days anymore, but there were people asking in the comments, so yeah. Perfect time.
So if you look, this is the dominance including stable coins, right? So it's still relatively low when you include stable coins. If you exclude stable coins, it's been putting in higher lows for a year and a half, right? Like you zoom in over here, the dominance excluding stables has been putting in higher lows for basically a year and a half. So if you look at most alt Bitcoin pairs, with the exception of a few, like BNB Bitcoin is high, and there's a couple others, most of the alt Bitcoin pairs are down, like ADA Bitcoin, Dot Bitcoin, Solana Bitcoin, AVAX Bitcoin. A lot of these have taken huge hits in 2022, and they could easily take further hits. But to really illustrate the difference between the dominance including stablecoins and excluding stablecoins, let me just show you really quick what that looks like. It might actually take me a minute to pull it up, but if you look at, here's the dominance of Bitcoin. Let me just remove everything else. This is taking a little longer than I was wanting it to. It's kind of lagging a little bit just because I have so many things open, but let me just click off these two other ones, and there we go. So this is the dominance including stables, and then if you exclude stables on the same chart, what's really interesting is that they used to basically be the same thing, but now you can clearly see that divergence between them, right? So stable coins are becoming a more important part of the cryptoverse, right? So like back in 2018, stablecoin, like the dominance didn't really, it was the same whether you included stablecoins or not, because they made up such a low percentage of the actual total market cap. Now stablecoins make up a larger percentage of the market cap. So including stablecoins, the dominance of Bitcoin is like 40% or so. Like I think it's almost 41% if you go over to TradingView. But when you exclude stablecoins, the dominance is already like 47%. So it really does show, the general direction that the trend is headed, and it's been heading in that same direction for the last year and a half.
Awesome. All right, let's yeah, that thanks for that information. That was very useful. I didn't even think about looking at it that way because I didn't really have a way to separate. Like I never really knew what some
Right.
of these indicators, how they're made. And I also hate the fact that I don't know how many shitcoins they're using, and there needs to be some liquidity there. Like I want this thing adjusted for
Right.
how liquid they are. Like if Binance, the company, is holding 50% of the Binance token, how is that a fair comparison, right? That's not
Well,
actively being traded.
well, and look what happened when look what happened to FTT the minute
Right,
people, I mean, it just came collapsing down very quickly. So
right.
yeah, there's also another way to look at it that someone else was posting on Twitter, and it's called the realized dominance. I don't actually have a chart for it, but actually it might even be a better way to look at the dominance.
Yeah, I agree. All right. What do you think of the Bitcoin mining industry? And is that a potential undervalued asset? Because some of these mining companies are down 80, 90%. And I know some of them are still able to mine profitably, even though others are going into bankruptcy. Do you see any value there? Because if Bitcoin does reverse into a bull market, it's just like with gold, like bull market, here come, the junior gold miners going up 100%, while
Right.
gold is up 5% because they were so beaten down. What do you think on that aspect of it?
Yeah. So whether the low is in or not, I sort of lean in the direction that it's not in for Bitcoin. And therefore, if that's the case, then a lot of these miners could remain under pressure. I showed you that chart earlier, right? The Peel multiple, you said you know him, right? He's one of your friends. And that's a measure of miner profitability as well. I look at these charts and I continue to think that coupled with a potential recession, right? Like we could still see a lot of pressure on some of these mining stocks. But with that said, I do think a lot of value will be found in a lot of these stocks in 2023 is my guess. And I think the bottom will occur before 2024 if it's not already in. And again, I don't follow the mining stocks super closely. But my guess would be that they'll bottom probably in 2023, and that the time to pick them up will be sometime between now and before the halving, right? I mean, you have to imagine that once we get to the halving and that sort of stuff, a lot of them will hopefully start to take back off in a bull market, right? But I guess that remains to be seen.
All right. Anything else in the world of trading, investing, any other asset classes, specific charts you want to discuss before we close out with a few questions on what your probabilities are on new all-time highs, new lows? That's kind of how I usually close the shows with my guests.
Maybe the dollar might be worth just mentioning for like a couple minutes, because the dollar is something that has been very very volatile right over the last couple of months. And one of the things I've been following here, let me just share my screen on the dollar, is we have seen a pretty massive pullback. Normally when the dollar sees these major pullbacks, that corresponds to a Bitcoin bull run, right? So like that's not necessarily that say that that's the only reason Bitcoin went into a bull run, right? I'm not saying that, but this area here was the 2017 bull market. This was the 2020 bull market. The dollar has seen a pretty big pullback right now, but right, Bitcoin hasn't gone anywhere. It's still trading below its June low. One potential argument is that you could be seeing a repeat of what happened over here in the 80s, where we actually went up to the same exact level, right? That 114 to 115 level. We then pulled all the way down back to around 102 to 103, and then it blasted off into space basically over the next 4 years. However, what's more interesting is that the correlation, there's been a correlation over the last decade. Oftentimes when the dollar is going down, Bitcoin's going up and risk assets are going up. But actually in the 80s, once the dollar broke through this right here and we sort of came back down, the stock market bottomed like right here. It did not bottom like in 4 years later, right? Actually, this area right here for the dollar, when it was going sky high, also actually corresponded to an S&P bull market. So sorry, I clicked on the wrong thing there. But that's something I've been following quite closely, and I'm really curious if we do see, and I think we have to ask yourself, well, what would cause the dollar to go back up if the Federal Reserve is getting close to the end of their rate hiking cycle? Let's say they make it to around 5% or so. what's going to cause the dollar to go up beyond that? Well, I suppose the main answer could be something like if earnings come in low, there could be a relative flight to risk off once again if people are worried that the S&P is going to go put in a new low. But yeah, like if you actually look just quickly, I'm overlaying the S&P 500, and what you'll notice that it actually bottomed right here in the summer of 1982, which corresponded to the breakout of the dollar. So that's something that I'm following right now. So if we see some type of surge back by the dollar in 2023 and it breaks, I think that would also correspond to a fresh low in the S&P 500. If the dollar continues on, that doesn't necessarily mean that the bear market for the S&P 500 has to continue. It could just be we're going into a new regime of where historically this correlation that has existed for the last decade doesn't necessarily have to exist anymore, especially if we're in a period of high inflation and generally different macroeconomic policies.
All right, no, very good. I'm going to do my quick screen share on the dollar. It's also something I cover on this channel. The MRI indicator called the top pretty damn perfectly in October, and now it is calling the bottom right now. My projection on the dollar was exactly what Ben just suggested. I think the dollar is going to go to a new all-time high. I think it's going to break the 1985 high. I don't usually remove these arrows. I started using TradingView back in 2013, 2014, and this was my arrow on the projection of the US dollar back in 2014, and I never took it away. And right now, my latest projection is that the bottom is pretty much in. That's what I was expecting, a pullback to the prior swing high where we are right now. And I'm expecting it to go up. As to try to answer Ben's question, what would cause the dollar to go to 150, 160, and 200? To me, that answer is easy. The dollar is measured against the euro. And I think the euro is about to implode. It is 65%. So I think the euro is going to break up, and it's just how it's measured. If they reevaluate how the dollar is measured, if they put in an element of, say, gold, if they put in an element of, well, we don't need Bitcoin in there, but even the Russian ruble, and if the Chinese yuan is properly, floated, then it becomes a different story. But as long as the dollar is measured against the current basket, I think it's going to completely explode to the upside to unseen levels. That's always been my view. And then the dollar itself is likely to implode within the next decade. And that's when Bitcoin may finally go into hyper Bitcoinization. But that is a very big macro outlook. But this has been on my charts for a while. All right, unless Ben wants to comment on everything I just said, we're going to close out the show with some, I guess, Bitcoin predictions. What do you say, Ben?
Sounds good to me. I like the view on the dollar. I mean, I don't know exactly how high it's going to go, but I could see it being fairly bullish for this decade, and then next decade it coming back down and Bitcoin really taking off.
Yep, that's kind of my outlook as well.
Right. Yeah.
All right. So, from a probability viewpoint, on a scale of 1 to 100, with what is your probability that the low is not yet in? So if you say, I give it a 60% chance, means people will get a chance to buy it, say, below 15,000.
Is there a time frame on that? Like, does it have to be within the next month, or could it be like 3 months from now?
Let's go with 6 months.
Okay. Yeah, I would say my general expectation is probably like a 75% chance we will eventually see a lower price.
Wow. Okay, that's higher than I expected. Okay, nice. Well, not really, but if you have some cash on the sidelines, it's super nice. Okay, now let's flip the question. What is the probability that Bitcoin goes to a new high before the halving? The halving is projected to be around March, April of 2024. And like new high, so look, if it's above, say, like, we're not talking about a pennies here, right? But vicinity of a new high or break into a new high before the halving. So again, if you say 70%, that means you're leaning that this will happen before the halving.
3%.
3%.
I don't think Bitcoin's going to hit a new high before the next halving. No.
Wow. Okay. Yeah, I like playing this game with you.
I mean, the halving's only like a year away, or just over a year away.
Year and a half.
Yeah,
like year and 4 months. Yeah.
But history shows us that normally after we have a bear market, we have a sideways year. So my general expectation for 2023 is that it's going to be mostly a sideways year, and you could potentially see a new low or not. I don't really think it's going to be going anywhere in 2023.
Okay. So let's flip it to the next halving. So I don't want to pick numbers. So we're going to go in the opposite direction. What do you think is a reasonable new all-time high prior to the next halving? So one more full bull cycle. What do you see as a reasonable target? 100K, 150, $250,000, just a reasonable number.
Yeah, well, I think to some degree it depends on how low we go. I think is part of that answer. Like if we go, if this is the bottom, if the bottom's already in or it's close to being in, I think we have a real shot of putting in. We could go to 6 figures, within the next like 4 years, 4 to 5 years or so. I don't think $250,000 is in the cards, for the next bull market. I think that the low or the access to cheap capital is not what it once was, and I don't know that the Federal Reserve is going to bring it back down to zero like it has been for most of Bitcoin's existence. The positive aspect of it is that higher rates have a way of getting all the crap out of the space. So hopefully that money can actually go into Bitcoin, which I think provides a lot more utility than a lot of these like micro caps that people are constantly pumping and that sort of stuff. I would say, I mean, if I were forced to say, given if the bottom, let me phrase it like this. If the bottom for Bitcoin is between 10K and where we are now, like 15.4, I would say a reasonable top could be probably somewhere between 69K and maybe 100K or so, maybe slightly above 100. If the low ends up being much lower and Bitcoin's first recession sends it into more pain than it normally experiences, and we go sub 10K in 2023, then there's a chance that we repeat what the NASDAQ did coming out of its .com crash, where it put in a low, it then put in a high, and then it put in a higher low. So imagine if Bitcoin goes sub 10K in 2023 for whatever reason, like let's just suppose this contagion stuff continues on. Like if other major exchanges come down, who's to say it can't happen, right? If that happens, then like if you don't see a higher high, or maybe you see a slightly higher high, I think we would probably come back down, put in a higher low. And by the way, if you think about it, this could line up pretty well with your dollar theory as well. Like if you think about if the dollar is bullish for the rest of this decade, if you look at the NASDAQ chart coming out of its .com crash, and you think about like the first cycle being a lower high, and then the second cycle getting us back up to the 2021 high, that would take us out till 2028. This is a very bearish outlook for the bull case. I'm not saying,
but the NASDAQ kind of ran into the housing bubble in a completely different market, right?
Yeah, but if you look at the housing charts today, they look pretty bad. I have like all sorts of housing charts on the website as well. They all look pretty bad. I mean, the problem is that the Fed's raising these interest rates so quickly that people are priced out. This is not my base case. It's just a if it goes that low, we would, if we go sub 10K, I think the case for 100K for the next peak is very hard to make if we go below 10,000. If we can stay around these levels, I think we can make it there.
There are all these intricacies in the market. So Ben just talked about 2 of them, but there is a third one. And the third one is, I mean, people call it by different things, but the third type is a 2020 flash crash. And we went from 8,000 down to below 4,000 in a blink of an eye. But because it crashed so quickly to such new lows, so much Bitcoin changed hands that there wasn't enough Bitcoin to go around. And it created this slingshot straight to the moon, breaking the prior all-time high and going 4x on top of that. So the third possibility I would add into it, and this is my kind of view, if we do capitulate below 10,000, but we do it in a flash crashy way, similar to 2020, which is unlikely because it just happened. But if that happens again, there is this other way where we go extra low, but then we swing again like a slingshot to unreasonably higher highs off of that because of how Bitcoin changed hands at that low.
Yeah, I think you're right. It depends on how we get there is the issue. If it's a quick capitulation, then the OGs, right, that have seen this 1,000 times, they're going to jump in. The problem is we're not seeing that. It's just like $1,000 lower, $1,000 lower, 1,000. It's like we're all wanting it to do what we've seen it do. It's just not doing it, and so that's what makes it especially difficult.
All right, Ben, thank you so much for being so generous with your time. Once again, I'm going to pull up your Twitter. Guys, if you are not following Ben, please do that right now. Follow him on Twitter, follow him on his YouTube channel. You'll be at 1 million subscribers soon. That would be absolutely awesome. And his website as well. He has a free newsletter and also options for more advanced analysis that he provides. Hopefully, I will be able to get him to one of these financial summits one day. So keep an eye as well. It's an event for traders, financial services, money managers. We do it at exotic destinations around the world. And that's the only thing I will be promoting in the future. Unconfiscatable, the Bitcoin conference will be coming back 1 year from now. Tickets should be on sale around Christmas time. So save the dates in Las Vegas, December 6th to 7th. All right, I'm going to stop the screen share and you get the last word. And then we're going to sign off, Ben.
Well, if you're from my channel, make sure you subscribe to Tone as well. One of the few guys who called the 2018 bear pretty accurately, I might add, and so I can vouch for that. I was following him back then. There weren't actually a lot of people to follow back then because there weren't many people.
No, it's so like man, like people like you, your views are blowing up. Like, but with me, it's like so disappointing. So I used to average 25,000 views per episode back then because I was one of the few people because I started early. I was writing about technical analysis in Cointelegraph when they launched in early 2014. That's how far some of my analysis goes back. So I've been doing this for quite a while. I had hair back then too. But no, thanks for following me back then. But yeah, so the good old days for me. I gotta get some more analysis right. Maybe I'll get them back.
Yeah, I mean, hey, I sort of just ended. I mean, I think that a lot of people are really concerned about what next year is going to bring, and my general thoughts are that if you just have some type of an accumulation strategy between now and the next halving, you're probably going to be doing pretty well by 2025, right? I don't know exactly where the bottom is. I could try to pretend like I know, but at the end of the day, I don't know where it's going to be. Did you want to add?
No, last question. Do you leverage trade? Someone asked that earlier.
No, I don't.
You know, okay. I would, my advice has always been, you should be, if you are gonna leverage trade, I don't want to say I recommend leverage trading, but leverage trading is a tool to lower the risk of how much Bitcoin you leave on the exchange. So that is probably the best use case of leverage trading. Because if you are looking to have 1 Bitcoin of exposure in a trade, you can do that by only risking 0.1 with 10x leverage. So that if the exchange goes down and you lose that Bitcoin, because we're dealing with an unregulated space, you only lost 0.1 instead of 1. So that has always been my #1 use case for leverage trading in crypto. Okay. Yeah. I mean, I don't use it.
But again, I'm also not really the same type of trader that a lot of people are, right? Like I don't have the background. I don't really have the background in it or the background for it. But yeah, hopefully the analysis is useful. And while there are some bearish indicators, I do think we'll be probably coming out of this mess sometime in the next 12, 18 months, and we should see some type of bull market 2024, 2025 timeframe.
Awesome. And we're going to look forward to that. All right, Ben, thank you so much for coming on the show. And hopefully we do this again in Q1 of next year.
Yeah, sounds good. Thanks again for having me.